The key to my investing success, especially in the long term, is diversifying my portfolio. I do this in a few ways. I've said many times that the core of my portfolio is broad index funds, like the S&P 500, but I also supplement that backbone with more specialized sectors. Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll break down my investing strategy with sector ETFs. Let me explain. This video is a sequel. In part 1, I covered my core strategy of broad index funds. That way, I have all my bases covered. I spread my money and I invest in the entire market, especially the US market. That's my foundation. On top of that, I like to double down on certain subsets or sectors of the market. I do that with sector ETFs. And the timing is perfect for this video because BMO has recently launched BMO SPDR Select Sector Index ETFs. And thank you to BMO ETFs for sponsoring this video. I've been investing with BMO ETFs from the beginning, and it's great to see them continue to add new products for Canadian investors like me. If you don't know, the US listed SPDR ETFs are the largest sector ETFs in the world. And now BMO is the first fund provider to bring these SPDR ETFs to Canada, here at home in Canadian dollars. So we don't have to worry about exchanging currency. More on that later. Okay, so what's so special about these BMO SPDR Select Sector Index ETFs? Remember, the S&P 500 is just a collection of the top 500 largest companies in the United States. It covers every industry: tech, banks, energy, healthcare, real estate, etc. You get them all bundled together. But what if you want to focus on just one industry? That's what these sector ETFs are for. They divide the US market into 11 sectors, and now BMO has all 11 of these US sector ETFs available for Canadians. You can see them here. BMO ETFs always start with the letter Z, and they're keeping it consistent with the US tickers. They're just adding a Z in front. And for each sector, there's a hedged version with a .F. I'll cover that at the end. And no, I'm not going to break down all 11 of these funds. I want to keep this video short and sweet and focus on my thought process. But heads up, I will be breaking my rule. On my channel, I typically don't speak on stocks or ETFs that I don't own. But since these BMO ETFs were just recently launched, I don't own any yet. For all these ETFs, remember, they're all based on the sectors within the S&P 500. So they're all well-established large cap companies. And BMO is setting the same low-cost management fee, 0.19% across the board. Easy and affordable. Note, the final MER for these ETFs may be a little higher, around 0.21% based on estimates. That's the final amount you pay per year. It includes all the costs behind the scenes. So what's my strategy? Once I have all my bases covered with broad index ETFs, I like to double down on specific sectors. If you've been following me for a long time, you know that I am heavily concentrated in real estate through stocks, REITs, and sector ETFs. With high interest rates, real estate has been going through a rough patch the past 2 years, but I am confident in the long-term future of real estate. And once it recovers, there's a chance that my investment will outperform the overall market. That's the point. I'm doubling down on a specific sector. It's not a passive or hands-off approach, it's more strategic. Sector ETFs allow me to customize my portfolio to fit my specific goals. It gives me more control of where I'm putting my money, while at the same time, I'm reducing my risk compared to only purchasing individual stocks, since I'm spreading out my investment across dozens of companies. As an example, let's look at tech. I don't have to tell you, the tech sector has been booming the past 15 years, even with the recent pullback year to date. In fact, tech dominates the overall US market. Recently, with the rise of AI, both hardware and software companies are growing at record rates. Apple, Nvidia, and Microsoft are now the 3 biggest companies, but which one will win? I don't know, and I don't care. I don't have to pick one. I'd rather own all 3. That way I benefit when all 3 of them grow. I can do that with ZXLK, the BMO SPDR Technology Select Index ETF. This ETF contains all 3 of them, with 13 to 15% weight for each. Of course, I can double down further by owning the individual stocks. I do that as well, but I don't want to miss out on the smaller tech players like IBM or Intel. I'd rather cover the entire tech sector. With ZXLK, I get exposure to 69 tech companies in the United States. And different subsets within the industry too. It covers software, hardware, semiconductor components, and IT services. This trend in tech affects other parts of the economy too. With growing populations and the explosion of resource-heavy data centers and GPUs, the demand for electricity is greater than ever. So I want to invest in the utility companies that generate and distribute that electricity, but it's hard to pick individual stocks. I have no idea which company will secure those long-term contracts, or which ones will face regulatory issues. I can't predict which utility company will win next year, let alone 10 years from now. So instead, I'll invest in ZXLU, the BMO Spider Utilities Select Sector Index ETF. And that way, I invest in 31 of the largest utility companies in the US. I'm investing in the sector, not one company. Plus, I gain exposure to natural gas distributors as well as electricity. I'll say it again, if you invest in the S&P 500, you'll gain exposure to all of these companies and all of these sectors. But if you want to customize your portfolio and concentrate on certain industries, then you could try a combination of these 11 sector ETFs. And thanks to BMO, they're making it super easy for us Canadians. All of these ETFs are in Canadian dollars. We don't need to worry about exchanging into US dollars or paying currency conversion fees. It's easy to get started. Remember how each of these ETFs have a .F version? That's the currency hedged version. It removes the currency exchange risk. Remember, we're using Canadian dollars, but we're buying US stocks. And so these BMO ETFs will depend on the underlying performance of the stocks themselves, but they also depend on the US dollar. If the US dollar gets stronger, then the ETF will grow in value. If the Canadian dollar gets stronger, then the ETF will lose value. That's the regular ETF, the unhedged version, like ZXLK. Now, with the hedged version, ZXLK.F, the BMO Spider Technology Select Sector Index ETF, hedged units, this removes the currency dependence. The hedged ETF will only depend on the underlying stocks. If the US dollar drops, ZXLK will drop, but ZXLK.F won't be affected. Which one you choose is up to you. Personally, I prefer the unhedged version. I want exposure to the US dollar. I look at it as another form of diversification. And if I'm already invested in the US economy, I hope that the US dollar grows. But exchange rates are unpredictable. Sometimes it hurts, sometimes it helps. So if you want to remove one layer of uncertainty, then you can go with the hedged version, the .F. That's the beauty of personal finance. It's personal. You can choose to hedge for currency or not. You can follow the index, or you can customize and add sector ETFs. It's your money and your choice. Thank you again to BMO ETFs for sponsoring this video. And make sure you check out bmoetfs.com for all the details. I'll include links to everything in the description box down below. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.